everyone, and welcome to Pod TV's #1 TV show, Wall Street Hackers with Peter Bennett. Peter got his BA in economics at UCLA. He got his law degree at the University of Miami, and he got his MBA in finance from New York University. And he continued to work on Wall Street for almost 17 years. And now he's bringing us his expertise and sharing with us some great tips on how we can swim those dangerous waters of investing. So everyone, join me in welcoming Peter Bennett. Peter, welcome. Hi.
Hi, everybody. So we're back for another episode. You can see us every Thursday, almost every Thursday during the year, on podtv.tv and all the other channels you might be watching on Roku and Vimeo. So we always start with the markets. And, for 15 months, I've been starting with the negative. I've been saying, which I was right about, and I think I still am. But instead of starting with, talk about inflation being out of control and recession, I found something that I'm going to start the show with a lot more positive, and I can do it every week. So can we bring up the first slide? This is basically about creating wealth. So Kim, can you bring up the first slide, which is
April 6th slide. There we go.
Thanks. So this is a really interesting slide, and I just saw it this week, but I've seen very similar things. So it's the returns of the S&P 500 index, and everybody's always like, oh, just go with that, go with indexing, but versus dividend stocks. And so it compares it to dividend growers and initiators and dividend payers. Then in the middle on the right, you see the equal weighted S&P 500, the performance for 50 years from 1973 to 2022. And then you have the performance of dividend non-payers and dividend cutters. And you can see a huge difference. This is $100 invested in 1973, and it grows to $13,000 and change. If we could just make it bigger, if we can, just a second more. But either way, it grows to $13,000. $100 grows to $13,000 if you went with the dividend grower initiators. Now, I don't usually have initiators because I don't know who's going to initiate. But dividend growers is a big focus of the Wall Street Hackers portfolio, and also dividend payers. That's a prime area of the focus. So yeah, you could go with the equal weight S&P 500, and personally, I don't think it's going to do as well in the next 20 or 30 years as compared to the last 30, because the government was stimulating the economy by reducing interest rates, but now they're realizing they can't reduce interest rates too low because it creates inflation. So even if we had a scenario of the last 70 years, 50 years, then it really shows you this is where you want to go. And I believe the Wall Street Hackers philosophy on investing is the way to go. So we can put down the slide now. And so then let's get into the negative, unfortunately, but that's what is there. I mean, I wish it was solved, but these are the same 5 factors we've been talking about over and over again. Why the Fed is not in control of inflation, why it might be like the 70s when the market really got hammered, and why you have to be very careful with your portfolio. So first of all, in employment and unemployment, well, there was a little breakthrough. For the first time, there was a drop in job openings to 9.9 million from 10.3 million, first time in years. So that was, a start. Now, it's not necessarily good news, but it's good news in the fight against inflation. But still, right now, there was 1.9 openings for every job. 1.9 openings for every person looking in January, and 1.7 now. So you still have a massive amount more people who are not looking, and that of jobs that need to be filled. 1.7 for every job. 1.7 jobs for every person. So this is not a balanced market. It might have been moving in the right direction slightly, but you still have about 10 million people who need to fill jobs, and they're not there. And leaving that subject, the U.S. Labor force is very stagnant. It's been basically flat all year, give or take a little. So these jobs aren't being filled by new people, there's a real problem there. And this is one of the 5 reasons why. And it was one of the biggest reasons why in the 70s things took off. Number 2 reason, the Fed is still obviously way below the rate of inflation, whether it's 6 or 5 or 7. And I think it's going to come back up high as oil prices start going up. Normally, for the last 50 or 70 years, again, they need to be at or above the inflation rate to fight inflation. So they're trying this longer, higher for longer strategy. And the market, by the way, is pricing in a reduction, which, we've shown is based on nothing. And they keep thinking it's going lower and lower in the future when the Fed is saying no. And the Fed is going to have a long battle. 3, the government's obviously overspending. Yes, it's not as much as a stimulus, but we're still looking at heading into a 2024 election. The government's not going to be doing a lot of cutting. It's not too popular anyway. And then we get to the real estate market where things have begun to drop, but there's probably a long way to go. And the key point is the bull in the China shop. The same reason again for the 1970s massive inflation, which lasted 15 years. This could be worse than the 70s because we know the oil companies and gas companies have for at least 7 years been putting in less than half of what they used to do into oil and gas projects. Now, will that necessarily bring oil prices down, very soon, or bring them up very soon? No, the answer is it won't necessarily, because the markets are pricing everything based on what the market thinks, just like the S&P 500. But the thing is, there's a fundamental gap. If they're putting in 40% too little to maintain oil and gas where it is, there's a very good chance oil and gas are going to be heading up for years, since these projects take about 5 to 7 years to reach fruition. So we've got a long way to go on oil too. So there's not that much good news on inflation. And I think tomorrow we're going to get a unemployment report, an employment report. And if it's another negative, in other words, in the fight of inflation, this could be the beginning. It just could be a theory again. Nobody knows what the market will be thinking, but this could be the start of a real decline. And back to energy, Goldman Sachs this week, again, their short-term forecasts, you could be all over, but they forecast oil to be back at $95 by the end of the year and $100 in 24. So let's say they're right. Again, short term, nobody knows. Long term, medium term, long term, I say it's going up, but it's probably going up short term too. But the thing is, let's say it just goes to what they're forecasting, $95 to $100 a barrel as we go into driving season. It's probably going up. China's reopened. Then this is going to make the Fed's fight against inflation much harder. And so it continues on and on. And the Fed is going to have to break the economy, unfortunately, and cause a recession if we don't go into one anyway. So I don't see the market as being a very safe place right now, obviously, and energy stocks are the place to be. Quote of the week, it relates to energy. The White House responded to OPEC's supply cut. And OPEC, surprisingly, nobody was expecting this. It was unexpected, but they cut 1.1 million barrels a day of oil. And the Saudis themselves cut 500,000. And so the White House responded to the OPEC cut saying the cuts are, quote, not advisable right now. I don't even understand that, really. I mean, not advisable from whose perspective? From the Saudis' perspective, it's advisable. But it wasn't popular, obviously, with the White House because this is going to fuel inflation. And we're heading into the 24 election soon enough. So the other point there is President Biden had sold down, had emptied the Strategic Petroleum Reserve heading into the 22 midterm elections. And he dropped the SPR by 36% in the 6 months right before the election. But he said he would buy the oil back at $70 when it hit 70, and he would make a profit on that. But he's not a trader. And I personally wouldn't be surprised if it never hit 70 at this point, in which case the trade wasn't very good. But I really think that what will happen is he won't fill the SPR up at all. now heading into the 24 elections, because that would drive it even higher. So I think we're just operating with the strategic petroleum reserve at around half of what it should be, half of full level. And it's a big mistake. Hopefully we won't need it, but sooner or later, whether it's this year, next year, sooner or later, they have to refill that oil. The most interesting stories of the week, and I'm keeping that to 5 this week. Try to shorten a little because we haven't gotten to the discussions a few times recently, because there's so much news to cover in half an hour. So the 5 most interesting stories of the week. 1, a company called Zipline, I was amazed by this, has been doing deliveries with drones. The drones hover at 300 feet and they drop a line down with the package to the home or office where it's being delivered. And these drones have flown over 40 million miles already. I didn't even know these were out there. They've delivered 550,000 packages already, and they're operating already in 6 countries and 3 U.S. states. So far, they've been delivering medicine for 75% of their deliveries and other packages for 25%. But they just came out with a new model that can support up to 8-pound packages. So welcome to the future. I mean, we're talking about, okay, I ordered my package on Amazon or whoever you're using, and a drone flies up to your house, drops the package down, and it can be done in most areas. So this is so futuristic. Story 2, a report from the Centers for Disease Control says half of American children under 5 don't eat a single vegetable or fruit daily. It's unbelievable, the lack of nutritional knowledge among people, many people. And it's crazy. I mean, we're raising a generation who doesn't eat vegetables and fruits. That could be worrisome. Talking about worry for Russia, story 3. So Russia is beginning to smolder and having really major short-term and long-term problems because of the war in Ukraine. Their losses so far include 60,000 dead, 200,000 casualties, 3,500 tanks have been destroyed. They've lost 305 jets and 291 helicopters. Now, that's just numbers, right? They must say, okay, that's a lot of people, but they're a big country. But the big 2 things are this. 1, Russia has now been in a recession since November 22, very bad for the economy. And the biggest long-term thing is they have a declining population already. And their population is 146 million. But with these losses, it could be generational losses. And that's for 2 reasons. 1, all those people who won't be having children, who are injured or unfortunately deceased, and they're young people. And the other thing is the psychological effects of this going on might cause younger people not to have as many children. So it's really, I don't understand what President Putin's thinking, but I always say, why doesn't he do the simplest thing? Maybe I consider simple. He could do it. He's the president. He has so much power. Adopt the U.S. Constitution. And I know that sounds crazy, but he could do it tomorrow. And in one day, he could become the greatest president in Russian history, the greatest leader for 1,000 years. Maybe he'd make a few adjustments or just do it, install a true democracy with balances of power. Maybe he does it and, installs it and says, okay, I'll be the president for 4 years, whatever it is. But he could do this and it would change world history. He could be one of the greatest people in the history of the world, as a matter of fact. And it would put Russia economy on the right course. I would point out they have not done well for hundreds of years, even though they have such rich resources compared to the United States, which also has rich resources. But why the difference? Because of the economic structures, democracy, the appeal of living in those things. So it's an idea anyway. Another 4th story of the week is last week we mentioned a former women's bicycle champion who participated in a race in New York City. And in the race, transgender women came in 1st, 3rd, and 5th. And that woman dropped out of the circuit altogether. She said, that's it. I've had it with women's racing. Well, this week, a bearded person who was the head coach of Team Canada said he was transgender and he claimed he was a woman. And so he entered a powerlifting tournament in Alberta, Canada, as a female. And he then lifted 370 pounds, setting a new record by almost 100 pounds. And he replaced the 275-pound record held by a transgender woman. Is he a transgender? I don't know, but it's an interesting story. Finally, rent control in New York City it's so out of control, overregulation. So not only are there 60,000 apartments sitting vacant now because landlords don't want to rent at a loss. In other words, their operating costs, their heat, whatever they're required to pay is higher. So they're just sitting there, 60,000 apartments. But not only that, but now a survey came out and the number of rent-stabilized New York City apartments that are operating in the red just jumped from 6.5% to 8%. So you're talking about not only 60,000 vacant apartments, but another 8% of apartments where landlords are, at least on paper, losing money, and maybe they'll go vacant soon too. So despite all this fact, progressives in New York now want to pass a bill that prohibits any evictions, even in non-rent controlled housing. So they want to extend it to everybody. If a landlord raises the rent by either 3% or 1.5% above the consumer price index. So is it any wonder that New York has built less housing, I've read, than any other state, and certainly less than other northern eastern states? Why would anybody want to build in these circumstances, or be a landlord for that matter, with out of control regulations? And this is the problem with government intervention. There's an anti-capitalist movement, and capitalism isn't perfect, and it should be adjusted. But there's such a socialist or anti-capitalist movement among many people in America, but they don't look at what happens when governments take over. First of all, if you look at the history of the world, you see socialist government and communist governments that just take power, because if you give a government that much power, they tend to take it, and almost always. But the other thing is, another perfect example is the cost of college education, which destroying the middle class. Or hurting them so much. The tuitions go up and up and up. Well, if the government wasn't giving low interest loans and making them freely abundant, then the colleges would have to cut back because the money wouldn't be there. So college tuitions have soared well above inflation, much, much higher than inflation for decades. And that's because of government intervention again. So governments have to be very careful and should be limited in their interventions. Let's take a quick break, and then we're going to get into the dividend stock of the week and our panel discussion. Be right back.
Hi, I'm Nathan Osmond, singer, songwriter, motivational speaker, and even mortgage loan officer. I've known Dr. Bill Danko for over 20 years, and we've shared the stage at many great financial conferences the world over. Just recently, Dr. Bill Danko did a great Zoom call for my sales associates and shared some great principles from his New York Times longest best-selling list, The Millionaire Next Door, but also what it means to be richer than a millionaire. This is his new book, and I highly recommend it. The entire team at the Elite Team was very appreciative of Dr. Bill Danko's time and his insights, as he's a speaker that speaks with conviction from the heart. In fact, we ordered over 100 different copies of this book to give to our clients and our associates, because we truly believe that by studying this book, it can really help you to get through these turbulent times. This book is solid with research and survey research and empirical evidence that helps you to understand that yes, money is important, but money plus happiness is even better. I highly recommend that you go get a copy of this book today. You won't regret it.
Okay, and we're back. So everybody saw the show at the beginning of our show, the chart, and that chart will be our mainstay at the beginning of our show from now on. So you could see if you want to build wealth based on history, and I believe the future will be the same. You want dividend growers, dividend payers, and also energy, because a lot of the dividend growers and dividend payers now and in the future are in the energy sector, and especially with a very likely shortages of energy that are coming. So the dividend stock of the week, we were going to do a long series on international dividend payers, but I have to shift back to energy because this is the time to go with energy, because the market thinks oil's going to stay at $70 or $80 a barrel, and I think it's going much higher. And these energy stocks are undervalued. So I started crossing over with ConocoPhillips because they're in 7 countries. They have 38% of their production international, but I'm only going with 0.25% on that. Why is that? Well, their dividend is low, and I'd rather get a dividend like in a pipeline or one of the other stocks I pick of 8% or 10% that can be growing rather than 2% and growing, but I still like it. So I went with a small allocation. I'll explain the rationale in a minute, but I just want to mention something. If you're saying, oh, well, it's 0.25% and ConocoPhillips isn't great. So I raised three companies I suggested recently. I raised all the allocations in ET, Energy Transfer. I went to almost 4%. You have to watch the previous shows. I can't go to everything, but fundamentals, pipeline, all that. EPD, I brought it up to 3.5%. Energy Product Partners, and WDS, which is an Australian company, again a high dividend company, which is rare for a regular stock, and I raised that to 0.5%. So if you don't like the Conoco, it's a long-term play. So it depends who you are. I'm a little older now, so maybe this isn't, I don't have 30 years and I won't be patient to, wait that long or even 10, but, I have it, I better have it, but I'm just saying. So ConocoPhillips, what it has to say is they have, if you look at TD Ameritrade, obviously well-known energy company, so this is not new, but their dividends is around 2%, but their price over cash flow right now is 5.05. So that's like a 20% cash flow yield. This, there's Nick down there. So you're talking about a huge cash flow. So they can use that to increase the dividends or to, build future projects. And if you look at the growth over the last 5 years, according to TD Ameritrade, annualized, they've grown their revenue by 21%, but their dividend has been growing by 36% a year. So you say, okay, 2%. Well, at the rule of 72, which you can look up if you don't understand it, but it's basically how long it takes to double, you're looking at every 2 years doubling. So maybe if it keeps this up, which I think it probably will, you're looking at 2% this year, 4% in 2 years, maybe 8%, 16, 32. With oil going much higher, in my opinion, and it's a long-term successful company, which, by the way, has a very low debt to asset ratio, which I always like to look at too, 0.18. So very low debt, international oil company. The last point I'll bring up there is that I personally put it in the IRA. I like to put my non-MLPs in an IRA or 401k because that way I'm getting a return of principal, because I don't know for sure what energy will be in 20 years. Maybe they'll find the miracle cure for, lack of energy and, fission and different things they're experimenting with. So I want to get my money back. So with an MLP at 10% or, a nice high dividend like WDS, in an IRA, I'm getting my principal back fast. Then it's all on the table, let it roll because it's all, gravy, but I'm already received my money back. So I like ConocoPhillips for a small allocation, but there's so much in energy I like, and I'm still about 28%. So panel discussion of the week. And we're a little tight again, but we have 4 minutes this week instead of 2 or 1. Quickly, Bitcoin. The question of the week is the market correct in thinking that Bitcoin should be worth $28,600 a coin? And why is the market pricing that? So very quick background. First of all, Bitcoin could go to $1 million or zero. I have no idea. Personally, I think it's a scarce amount of nothing. That's somebody else's quote, but I stole it. But look at the 4 factors. 1, how many Bitcoins are there? We'll put this up after I go through these factors, and then we'll start the discussion. But we're looking at, depending on how you're counting, 9,900 to 22,000 different cryptos out there already. People are creating these at a rapid pace. Why not create your own money? Number 2, there were significant changes to the tax laws in the United States last year, and I'm expecting other countries will implement similar things. So it's no longer secret in the U.S. You have to pay tax on it. It's difficult to pay tax, by the way, on it. So the secrecy is gone. So number 3, more and more countries are developing cryptos themselves, digital currencies, I should say, themselves. So 114 countries are now offering or developing digital currencies. We're looking at 11 countries already offering it, including the Bahamas, St. Lucia, and Montserrat. 18 countries are already in pilot, so they'll probably be offering it soon, including India, Sweden, China, and Japan. So now the last point is, some people say, oh, Bitcoin is different than these other 10 to 20,000 cryptos because Satoshi Nakamoto has promised not to issue any more. Little problem with that. Nobody knows who Satoshi Nakamoto is. And even if they did know, they don't know where to find him. But also, nobody even knows if Satoshi Nakamoto exists. So that promise isn't worth a lot. So you can have something down the road, a digital currency where India's backing it up, or Japan, a whole country. I know they're real. Or you could have Satoshi Nakamoto. So the question is, how is the market pricing Bitcoin at 28,000? And I'm going to just flash this up. I was going to show it, but we're really tight on time again. So this is the quick chart of how many cryptos have been created year by year. And this chart shows 9,900 now. So it's just create another one. In November 21, there were 7,500. This is January 22, by the way. There's even more. But according to this chart, it's 9,900. This is like exploding. It's like everybody will have their own currency. Why doesn't every family have their own currency? So the question is, how can this be? Kim, what do you think? Uh-oh, you're on silent.
Minute.
No, you're on silent again. Kim's having some technical issues. So
here we go. All right, I'm back. So hear me out on this. Over the years, this is all we've kind of watched. And just like stock, sometimes we can't explain exactly why all of a sudden, like AOL, just boom, went out of the doors, and people value a company at 10 million when it doesn't even generate 10 million.
That's true.
So, how do you do that? And the concept is that it happens. Somebody just makes up a value and says, okay, this is what it's worth today. I think sometimes it's generated by how many miners and that are out there generating the Bitcoin itself, how much was generated, how many people dove in to buy that week. And again, we've watched over the years how celebrities would inspire people to buy more coins, and then the price would jack up. The celebrity would back out, take all his money with him, and people were left with nothing. So I would say invest in Bitcoins about with the same caution that you would anything, right?
Like
just take a long look at what the value is, who is doing it, and how it got to that value. Why would you invest in something that just magically got a value to it? Now, if there was something, I think, physically backing it, but we invest in a lot of things. Even our own money doesn't have anything backing it, right? I mean, I don't know.
Yeah, absolutely. So, I personally would.
I wouldn't buy it.
You could go to Vegas and bet on red a couple of times in a row too, and you might win and you might lose, but it's so speculative. It's because it's purely driven by speculation, because there is no fundamental value. But the thing is, the fundamental value is going to be, the fundamental value arguments are being undermined by the taxation, by the lack of secrecy, and most importantly, by digital currencies. Once you have Japan or India or the United States, probably Canada, offering digital currencies, like, why do I want Satoshi Nakamoto or one of 9,000 and increasing every day cryptos? There's no it's very speculative. But the other point is, any pricing is based on so many factors: perceived value, hope and fear, knowledge and ignorance. And this is true of the markets too. This is why, the markets keep pricing in things that I don't think are right, but maybe they will be, because that's, at least there's some fundamentals there. But, you could just go out and buy a lottery ticket. And I understand why you do that, because, one, very rarely people win. The other thing is you have the dream, it's like, what would I do? So you're spending $10 or $1, hopefully not much more, but whatever, if you want to spend $20 or $100 on a lottery ticket, you're not investing thousands of dollars or 28,000 into a lottery ticket. But, and you at least get the pleasure of the dream. But with Bitcoin, you have really a scarce amount of nothing. And that's my conclusion. And you know what? Don't hold it against me if it goes to $1 million, because it's worth zero. But the market can price anything the way it wants in the short run. But as Buffett said, in the long run, fundamentals rule. In the short run, it's a pricing mechanism. That's exactly almost his quote. So that wraps up our show for this week. We went 2 minutes over, but that's okay, because we can go to 5 if we need it, right, Kim? So as Kim always says, get healthy and get wealthy. And we will see you next week, and we'll have another show for you on Thursday. See you soon.
That's right. See you soon. And we lost the Wall Street hacker video
connection.
No, but I'll tell you what, just keep talking for a minute.
Okay. Oh, I see. To the ending video. Yeah, that's fine. We can always just cut off the show at this point.
No,
although we're
got
on,
it.
We're on
I got it.
Okay,
Take
good.
care.
Perfect. Hey, Kim.
Hey.
All right. No big glitches.
Yeah, just
What?